Something extraordinary just happened in the gold market, and if you're not paying attention, you're about to miss the biggest wealth transfer in modern history. While everyone's distracted by headlines and political theater, gold just sent a signal that changes everything. Not a prediction, not a theory, a confirmed signal that the financial system as we know it is entering a new phase. Let me show you exactly what happened. Gold recently broke through a critical technical level that it's been testing for months. We're talking about a resistance zone that's held firm through multiple attempts. When gold finally punched through, it didn't just edge past it. It exploded higher with conviction. The kind of move that tells you something fundamental has shifted. But here's what makes this different from every other gold rally you've seen. This isn't retail investors piling in. This isn't fear-driven buying from small players. This is institutional money, central banks, sovereign wealth funds, the kind of money that moves markets and doesn't make mistakes. Look at what's happening behind the scenes. Central banks just completed their highest year of gold purchases on record. We're talking about over 1,000 tons of physical gold accumulated in a single year. That's not a trend. That's a coordinated shift in strategy. China's central bank has been buying gold for months straight, not slowing down, not pausing, buying consistently, month after month. The People's Bank of China knows something. They're preparing for something, and they're not alone. Poland just announced they're accelerating their gold repatriation program, bringing physical gold back from foreign vaults to Polish soil. Why would they do that unless they're concerned about the stability of the current system? Unless they're preparing for a scenario where having physical possession matters more than paper claims? India's central bank has been quietly building their gold reserves to levels not seen in decades. Turkey's been buying. Singapore's been buying. Even countries you wouldn't expect are suddenly prioritizing gold over dollar reserves. This is the story nobody's talking about. While the mainstream media focuses on interest rates and inflation data, the world's central banks are voting with their actions. And they're voting against the dollar. Think about what that means. These aren't conspiracy theorists or gold bugs. These are the most sophisticated financial institutions on the planet. They have access to information we'll never see. They understand the system from the inside. And they're moving their reserves out of dollars and into gold. Now let's talk about what's driving this. Because it's not just one thing. It's a convergence of forces that's creating a perfect storm for the dollar. First, there's the debt situation. The United States is now carrying over $35 trillion in national debt. That number is so large it's almost meaningless. But here's what makes it real. The interest payments on that debt now exceed the entire defense budget. We're spending more just to service our debt than we spend on our military. And it's accelerating. Every year, the deficit grows. Every year, more debt gets added. Every year, the interest burden gets heavier. There's no political will to stop it, no plan to reverse it. Just an assumption that we can keep borrowing forever because the dollar is the reserve currency. But what happens when the world stops believing that assumption? That's where BRICS comes in. Brazil, Russia, India, China, South Africa. These aren't small players. Together, they represent over 40% of the world's population and a growing share of global GDP. And they're building an alternative system. They're not just talking about it anymore. They're implementing it, creating bilateral trade agreements that bypass the dollar, settling oil transactions in yuan, building payment systems that don't route through Western banks, establishing currency swap lines that make dollar transactions unnecessary. Russia and China are now settling most of their trade in their own currencies. India is buying Russian oil in rupees. Saudi Arabia is accepting yuan for oil sales to China. These aren't hypothetical scenarios. This is happening right now. And every time a major trade flow moves away from the dollar, the demand for dollars decreases. Every time a country builds reserves in something other than treasury bonds, the support system for dollar dominance weakens. The petrodollar system that's underpinned American financial power for 50 years is cracking, not collapsing overnight, but cracking. Slowly, methodically, irreversibly. Saudi Arabia recently let their petrodollar agreement with the United States expire. They didn't renew it. They didn't extend it. They let it lapse. That's not an accident. That's a strategic decision. They're keeping their options open. They're preparing for a world where the dollar isn't the only game in town. Now, here's where this gets personal. Because this isn't just about geopolitics and central banks. This is about your wealth, your retirement, your purchasing power. When the dollar loses its reserve status even partially, the effects ripple through everything. your savings account, your retirement accounts, your fixed income investments, everything denominated in dollars loses value relative to real assets. We've seen this movie before. In the 1970s, when confidence in the dollar collapsed, gold went from $35 an ounce to over $800. That's not a 20% gain. That's not even a 100% gain. That's a 2,000% increase in less than a decade. People who held gold through that period didn't just preserve their wealth, they multiplied it. While everyone else watched their purchasing power evaporate through inflation, gold holders saw their net worth soar. And here's the thing. The setup today is even more extreme than the 1970s. The debt levels are higher, the money printing is more aggressive, the geopolitical tensions are more severe, the alternatives to the dollar are more developed. Quick aside here. If you're sitting on significant retirement savings, you might want to look into how gold IRAs work. I put together a free guide that covers the mechanics, the tax implications, how to get physical gold into your retirement account without penalties. It's in the description if that's relevant to your situation. Worth understanding your options before things accelerate. Anyway, back to what's happening in the market right now. The technical picture for gold is extraordinary. We're not just talking about a breakout. We're talking about a breakout with massive volume, institutional accumulation, and a fundamental backdrop that supports much higher prices. Look at the COMEX data. The commercial traders, the big banks that usually suppress gold prices, they've dramatically reduced their short positions. They're not fighting this rally. They're stepping aside. That's unusual. That tells you they see something coming that makes shorting gold too risky. The open interest in gold futures is expanding. More contracts, more participants, more capital flowing into the gold market. This isn't a speculative bubble. This is a structural shift in how institutions are positioning themselves. And the physical market is even tighter. The premiums on physical gold coins and bars have been elevated for months. Dealers are struggling to keep inventory. Mints are running at capacity. When you see that kind of disconnect between paper gold and physical gold, it tells you the real demand is overwhelming the supply. There's a reason for that. Physical gold is finite. You can't print it. You can't create it with a keystroke. You can't inflate it away. It's the ultimate form of money that governments can't debase. And right now, the smart money understands that matters more than ever. Think about what's happening with inflation. The official numbers say inflation is moderating. But walk into a grocery store, look at your rent, check your insurance premiums. The real cost of living is still climbing, and the gap between official inflation and what people actually experience is widening. That's not an accident. The way inflation is calculated has been changed multiple times over the decades, always in ways that make the number look smaller, always in ways that reduce cost of living adjustments, always in ways that benefit the government at the expense of citizens. But gold doesn't lie. Gold reflects the real loss of purchasing power, and gold is telling you that the dollar is worth less than the government wants you to believe. Here's another angle most people miss. The mining supply of gold is actually declining. After years of underinvestment in new mines, the amount of gold being pulled out of the ground each year is starting to drop. It takes 10 to 15 years to bring a new gold mine online. The decisions made a decade ago are showing up in today's supply constraints. Meanwhile, demand is surging, not just from central banks, from institutional investors, from family offices, from high net worth individuals who understand what's coming. You've got a declining supply meeting increasing demand. That's the most bullish setup possible for any asset, and it's happening in gold right now. Let's talk about what this means for the broader financial system. Because gold isn't just going up in isolation. It's going up as a vote of no confidence in the current monetary system. When gold rises, it's telling you that people don't trust the value of paper currencies. They don't trust the promises of governments. They don't trust the stability of the banking system. They're moving to something that's held value for 5,000 years. And that lack of trust is justified. Look at what happened in 2008. The entire financial system nearly collapsed. Banks that were considered too big to fail needed trillion-dollar bailouts. The Federal Reserve had to create money on a scale never seen before just to keep the system functioning. And what did we learn from that crisis? Nothing. The banks got bigger. The leverage got higher. The derivatives got more complex. The systemic risk got worse. We didn't fix the problems. We just papered over them with more debt and more money printing. Now we're facing the consequences. The Federal Reserve's balance sheet exploded from under $1 trillion before 2008 to over $9 trillion at its peak. That's not normal. That's not sustainable. That's a sign of a system that's fundamentally broken. And every time there's a crisis, the response is the same. Print more money, lower interest rates, bail out the banks, protect the system at the expense of savers and workers. Gold is the escape hatch from that system. It's the asset that can't be debased by central bank policy. It's the wealth that exists outside the banking system. It's the insurance policy against monetary chaos. And right now, that insurance policy is getting more expensive because more people are realizing they need it. Think about the geopolitical situation. We're in a period of unprecedented tension between major powers. The United States and China are in a strategic competition that's only intensifying. Russia has been cut off from the Western financial system. The Middle East is more unstable than it's been in decades. In times of geopolitical uncertainty, gold has always been the safe haven. It's the asset that holds value regardless of which government is in power, regardless of which currency is dominant, regardless of which political system prevails. That's why central banks are buying it. They're not betting on gold going up 10% or 20%. They're preparing for a scenario where the current system breaks down, where the dollar loses its privileged position, where having physical gold means the difference between financial survival and collapse. And here's what's fascinating. This is all happening while most retail investors are completely unaware. The average person has no idea that central banks are accumulating gold at record rates. They don't know about the BRICS payment systems. They don't understand the implications of the petrodollar system breaking down. They're still operating under the assumption that the dollar will always be the reserve currency, that the system will always function the way it has, that their savings will always hold value. But the people who understand how the system actually works, they're positioning themselves differently. They're buying gold, they're buying silver, they're moving wealth into assets that can't be printed or debased. There's a reason billionaires and family offices are increasing their gold allocations. There's a reason hedge funds are building positions in precious metals. There's a reason the smart money is moving early. Because they know what happens when everyone else figures it out. When the crowd realizes the dollar is losing its status. When the panic buying starts. When the premiums on physical gold explode. When you can't get delivery at any price. We saw a preview of this during the pandemic. When uncertainty spiked, physical gold became nearly impossible to buy. Dealers were sold out. Premiums went to 20%, 30%, even 40% over spot price. People were desperate to get their hands on physical metal. That was just a taste, a temporary disruption. Imagine what happens when the loss of confidence becomes permanent, when it's not a crisis that passes, but a structural shift that accelerates. The gold market is relatively small compared to other asset classes. The entire above-ground supply of gold is worth around $15 trillion. That sounds like a lot until you compare it to the bond market, which is over $130 trillion, or the stock market, which is over $100 trillion. If even a small percentage of that capital decides to move into gold, the price impact would be enormous. We're not talking about a 50% gain. We're talking about multiples of the current price. And the signal we just got, this technical breakout with institutional buying, it suggests that shift is beginning. The early movers are positioning. The smart money is accumulating. The central banks are preparing. History shows us what happens next. In every major monetary transition, gold revalues higher. Sometimes gradually, sometimes explosively, but always significantly. When the Bretton Woods system collapsed in 1971, gold went from a fixed price of $35 to over $800 by 1980. When the financial crisis hit in 2008, gold went from $800 to over $1,900 by 2011. Each time the system faced a crisis of confidence, gold multiplied in value. And each time, most people missed it. They waited too long. They didn't believe it could happen. They trusted the system to protect them. But the system doesn't protect you. The system protects itself. The bailouts go to the banks, not to savers. The money printing benefits asset holders, not wage earners. The inflation tax falls on the people who can least afford it. Gold is how you opt out of that system. It's how you protect yourself when the rules change. It's how you preserve wealth when currencies fail. And right now, gold is telling you the rules are changing. Look at what's happening with digital currencies. Central banks around the world are developing their own digital currencies, CBDCs, central bank digital currencies. They're not doing this for your convenience. They're doing it for control. A digital dollar gives the government complete visibility into every transaction, complete control over your spending, the ability to freeze your assets with a keystroke, the power to implement negative interest rates by making your digital money lose value if you don't spend it. That's not a conspiracy theory. That's the stated goal of CBDC programs: financial surveillance and control. And it's coming faster than most people realize. Gold is the antidote to that. It's private. It's physical. It's outside the digital control grid. You can hold it. You can store it. You can transact with it without permission from any authority. That privacy and independence becomes more valuable every day as the surveillance state expands, as financial controls tighten, as the government's reach into your economic life grows. The wealthy have always understood this. That's why they hold gold. Not because they're paranoid, because they're informed. They know how the system works. They know what happens when governments get desperate. They know the value of having wealth that exists outside the system. And now, with gold breaking out to new highs, with central banks accumulating at record rates, with the technical and fundamental picture aligning, the message is clear. The reset is beginning, not tomorrow, not in a single dramatic event, but in a series of steps that are already underway, each one moving us further from dollar dominance, each one making gold more valuable, each one confirming that the old system is dying and a new one is being born. You can ignore this signal. You can assume the dollar will remain supreme forever. You can trust that the system will protect your wealth. Or you can look at what the central banks are doing, what the smart money is doing, what history tells us happens in moments like this. Gold just confirmed the end of the dollar's monopoly. The only question is whether you're positioned for what comes next.